Okay, good afternoon, everyone, and welcome to Pre-Transaction Planning. It's not just business, it's personal too. My name is Lou Della Prida. I'm a managing partner at the NYBB Group, and I will be your moderator for today's session. We'd like to accomplish 4 goals throughout this seminar. In particular, we want to talk about the very powerful link between the personal issues and business issues as they relate to a business owner contemplating an M&A transaction. So over the course of the next hour, we'd like to discover how the pandemic is impacting the clients of the different advisors that are here, discuss the pre-transaction planning that should take place prior to an M&A transaction, explore the personal and business issues facing business owners today, and assess how to plan for a post-COVID world. We have a great group of panelists, and I'd like to actually go around and have each one of them introduce themselves briefly to you. We could start with you, Robert.
Yes, hi, I'm Robert Barnett. I'm a tax partner at Capell, Barnett, Matalon, and Schoenfeld. And thank you. It is a pleasure to be here. Hope everybody is feeling well and your family's healthy, and we'll get through this. Our practice is a diversified law firm, so I'm going to be presenting today from that perspective of succession planning, maybe family issues and the like, and of course, some tax issues that are my bread and butter. So thank you.
Excellent. Anthony?
Hi, I'm Anthony Citrolo. Thank you, Lou, for moderating, and I appreciate you for putting us together. I'm a CPA and a certified merger and acquisition advisor and partner at the NYBB Group with Lou. We have that company and the NYBB Commercial Real Estate, which was started a long time ago. We are transaction and M&A advisors to lower middle market companies seeking either acquisitions or an exit or a sale. Really industry agnostic, but we have a local presence in New York, but have a national alliance of companies that allow us to really represent clients throughout the country. And hope everyone is healthy, safe, and balanced.
Excellent. Mark?
Thank you, Lou. Thank you for putting this all together. My name is Mark Kravietz. I'm a managing partner at Aline Wealth. What I do is I help business owners get ready for an exit, whatever that exit might be. We also help manage their assets after the transaction. My background is I'm a certified exit planning advisor. I'm a certified financial planner. I'm president of the New York chapter of Exit Planning Institute. I've helped over 100 business owners, families get ready for and go through an exit. Thanks.
Excellent. And Gabe?
Thanks, Lou. Hello, everyone. My name is Gabe Lengua. I'm a partner at PKF O'Connor Davies, a large regional accounting and consulting firm. At O'Connor Davies, I lead the company's consumer goods group, and I also do a lot of work within M&A, which tends to be exit readiness, also tends to be a lot of Q of E due diligence.
Excellent. Thank you. Thank you guys so much. So we'd like to, before I kick things off, I just want to go over a little bit about the format. We're going to discuss the 4 main points that I alluded to before, and then we're going to have a Q&A session. So as you think of questions as the participants or the panelists are speaking, please submit your questions in the attendee chat area, and we'll go over them at the end in the Q&A section. So let's start off by, I wanted to set the framework for our discussion, and in particular by going around and seeing how the pandemic is impacting not just your practice, but also your clients from the prism of your particular discipline. So Anthony, can you kick things off?
Sure, thanks, Lou. Interesting point. Since we started our company back in 2003, I look at the last 20 years and 20 plus years, and the folks in the New York metro area especially have been through a lot between 9/11, the 2008 recession, Hurricane Sandy, and now the pandemic. It's been an interesting and tough 20 years. Many of them have been successful, but have faced a lot of challenges, and this is probably the largest one. I find the pandemic and what's gone on here has probably been, the impact has been dramatic, I would say, both personally and and on their business. You look, I mean, commerce, tourism, investment, supply chains are kind of in disarray. On the personal side, I think it's affected every one of them. Changes in their habits, their normal routine, dealing with issues, and issues they've never seen before. And as we look to represent clients who are selling their company, the personal part of it really is impactful on them in terms of what their decision-making process is going to look like. I guess the business too, it depends on the nature of the business. Only a few businesses continue to be, prosperous and busy. Many of them have employee issues, and we tell folks they got to remember the three important metrics when people are looking at business. One is net cash flow, which has been impacted. People look at risk, which has been impacted, right, in a way that we can't even assess. And then scale. I mean, how can folks scale their business? So I think what's happened is that we've seen a lot of renegotiating of terms for folks who want to sell their company. I think they have to accept that. There's going to definitely be an alteration in kind of lifestyle to a certain extent in terms of when retirement's going to happen, and perhaps when folks think they were going to relocate. And then I just hope that folks are not frozen. I think what happens is when business owners and other people really don't know what to do, sometimes they don't do anything. And we just hope that there's not a sense of fear or panic or concern, although they are concerned. One of the biggest concerns folks have, second to maybe economics, or maybe first economics, is the protection of both their families and their employees. The number of folks who are concerned about their employees and their staff just boggles the mind. I mean, not that I didn't expect it, but it's really intense. So I think that's kind of my assessment from a personal and business standpoint, Lou.
Excellent. Thank you so much for that feedback. Rob?
Yes, thank you. And just to kind of expand on Anthony's take, we've certainly seen within our firm a lot of adjustments, parts. We have a division that does landlord-tenant work and litigation, general commercial litigation group, as you could imagine, for this whole shutdown period and probably for quite some time even after. Those are very challenged divisions. And our real estate, we do a lot on the buy-sell side and the development side with real estate, more commercial lately, but we do have some residential transactions. We're seeing clients both react to this in the buyers have literally dropped off the table. The deals are being renegotiated literally as we speak. I spoke with a buyer who, right before the epidemic hit, had put down very sizable earnest money on a transaction, and they are very seriously thinking of walking away from that transaction. And we're trying to help structure that and look at that both from a legal point of view, maybe a refund, a negotiation. It involves a lot of investigation, and I've been advising them on that. At the same time, what Anthony said was, I hope this doesn't act as a freeze. We're seeing clients that are both motivated in this and frozen. So I think on a lot of third-party transactions, there seems to be a lot of wait. We want to see what's happening, both from the buyers and sellers standpoint. On the family side, however, and when I look at business succession and transaction, I'm always thinking from the estate side, from the tax side, what's the best way to accomplish? We are seeing that many of our families are being motivated now plans and transactions that we've been discussing for the last couple of years that they were frozen on. Maybe mom and dad see their future. Maybe they're uh, thinking about the worst with this. They want to make this move. They want to transition parts of the business down to the children. And I'm going to be speaking a bit about some of those things as we move on. But there are tremendous opportunities that have opened up both in the valuation sphere, and I think a lot of people today will be talking about valuation, as well as due to the very, very low or no interest rate environment. And we can talk about some of those areas, time permitting, and get into some of the weeds. But in the big overview, as we present some of that to our clients, and they've been calling, they've been looking at some of that as a real motivator. So we're actually working on 3 or 4 projects that were stalled before the epidemic. And so it's interesting. It's been a mixture of both.
Excellent. Thank you so much. And Mark?
I would say the biggest thing that our clients are looking at is uncertainty. We've been through very, very tough markets in the past, but the uncertainty of a COVID-19, where we're not sure when things are going to open up, we're not sure if things are going to get worse again and we're going to have to close down again. There's a lot of uncertainty that's out there. And so we use our best guesswork on there. There's absolutely no one out there that absolutely knows what's going to happen in the markets. What we did last year was we had gotten a special program where we can stress test clients' portfolios. So we last year made a lot of adjustments to our clients' portfolios because we had 10 years of a bull run. And a lot of clients' portfolios kind of got out of balance. So we utilized the stress test. And in the stress test, we can stress test a portfolio looking at if we would have another 2008 situation. And well, look what happened this year. It wasn't 2008 situation. We had a pandemic. Who knew that would happen? But thank God we had stress tested a lot of portfolios last year and made a lot of changes. So what we continue to do is we continue to stress test our clients' portfolios and some of their friends and family and other referrals that we've been getting. In addition, we've been doing tax loss harvesting to harvest some tax losses against future gains. In addition, last month, there was some items, some investments that went down unfairly, and we had tactically bought into those investments. So we continue to monitor the situation, look at what the uncertainty is, and take advantage where we can.
Great. Thank you so much. And Gabe, tell us what's happening in the accounting world.
Yeah, I think just about every conversation I've had with clients over the past month or so has centered on liquidity. So, a lot of companies have been in survival mode, and it's really been focused on liquidity, things like 13-week rolling cash flow forecasts and deferring expenses and making decisions about employees, trying to maximize their credit lines, things like that. A big thing we've been working with clients is with the Paycheck Protection Program. And so that's been a good program. Many of our clients have applied for it and in most cases have received the funds, which is a good thing, but lots of complexities that have come along with that. So we've been working with clients. 2 big things now is to try to maximize the forgiveness piece of that program. So there's lots of questions about that. And then also the need-based elements of it, because we have, a lot of clients that are concerned, what if my situation was such that I thought it may have been more dire. And then as the weeks evolved, we saw that it wasn't so bad. We took this money, are we at risk? And I think to the extent that you took a larger loan, some of our clients, many of them actually do have loans over $1 million, over $2 million, this SBA PPP program, they have those concerns. And so we've been working with them on figuring out how to maximize the forgiveness, but also to make sure they've documented from a need standpoint, that they're going to be okay. And I think, Anthony, I just want to touch on one thing. I think Anthony said it earlier. Most of my clients, have been through crises before, especially over the past 20 years. And, we try to encourage them also to just refer back to that and understand, what were the lessons that you took away from it? This is certainly unique. There's no question about that. But what lessons did you learn, and what worked and what maybe didn't work in a previous crisis? But again, most of the conversations have been focused on liquidity, I think for obvious reasons.
Excellent. Thank you so much, Gabe. So you brought up a great point with the PPP, and our sense is that everyone has really been focused on just surviving, managing cash, and taking advantage of the different programs. But our thesis is that the time will come when market participants will either need to do an M&A transaction, either on the buy side, on the sell side, potentially even a merger. And so the next question that we wanted to go over was, what type of pre-transaction planning needs to be done by those that either need or desire to do an M&A transaction? And as you answer the question, if you could try to keep your response to 2 minutes so we can get all of our questions in, I'd appreciate it. So Anthony, if you could go first.
Okay, so I'll stay within 2 minutes and I'll talk faster, right?
We're New Yorkers. We can handle it.
Anyway, so, look, I mean, our conversations with folks prior to this pandemic was, if you need to get ready, think about things like, what's the state of the M&A market? What does your industry look like? What is the competition if a national competitor moved in? What are your health or personal circumstances? And what happens? I mean, really, if the economic tide doesn't necessarily go in your favor. So, our conversation now with pre-transaction planning is, we tell folks really just kind of get ready, put some procedures in place today that maybe time didn't permit previously. Use your time wisely today. Put your financials in place. Make sure they have 3 to 5 years of financials, year-to-date numbers. Do some competitive research. Understand what your market looks like. Maybe you never got your arms around that. Work on your personal financial plan. Give yourself some options now that we know options are really needed, right? I mean, going forward. And have a go-to-market strategy. Now's a great time to strategy. And we feel on our side, on the M&A side, that there probably will be somewhat of a buyer frenzy. There's going to be a lot of folks who think that there's a lot of deals out there. So you need to know what the path is to kind of your magic number, what the acceptable terms are, and then try to perfect some of those business deficiencies that you see maybe need to be perfected in a certain way, or actually corrected so that you can maximize your value. And I think that that's kind of our pre-transaction kind of message for now, Lou.
Excellent. Thank you so much. How about you, Rob? What about from an estate planning or legal perspective?
Well, I could speak all day on this question. Of course, I have 2 minutes. 2 minutes. So let me kind of boil it down to what I think would be the most important for this. Do your due diligence up front. Now is a great time to really work on your due diligence instead of treating it as the buyer's work. If the seller pre-plans, look at where you're weak, review your financials, meet with your sales advisors, okay? Meet with the experts at NYBB and say, okay, how can we be structuring this? How can we look at this? Do your own legal checkup. How old is your certificate? What does it look like? What are the business purposes? What are the voting agreements? When did you update your minutes last? All of these things that may prove embarrassing down the road, get it cleaned up now so the company looks strong. Look at that EBITDA. How could you talk to your CPA? Okay, how could you look at those numbers, get them into explanation, look at the trends, analyze the trends, develop your process, look at your key employees, employment agreements. Very, very important to that buyer. That buyer's going to want to know Who do I need? And are they just going to run or are they going to be here? Think about the aspects of the deal. What is your time frame? Very important. Do you have an old-fashioned C Corp? I'm always amazed. I still run into them. Would an S election make sense? Can it be done? What's the tax cost? And what are the tax savings? I could go on all day, but I think my 2 minutes are up.
Excellent. Thank you. Mark?
In pre-transaction planning, a lot of cases, I'm going to be the first stop for the business owner to come and see me. Why? Because we're going to do a financial plan for them, and in that financial plan, we're going to take a look at what assets they have, how much have they put away already, and how much the business possibly could be worth. And we'll do different what if scenarios. What if you business went out of business? How would you look? What if the business got a certain multiple? What if it got an average multiple? What if it got a better multiple? So we'll do these different what if scenarios to see if they would be okay if they did sell their business at that time. Right now, Rob had mentioned before about a family that's motivated to sell. We're talking to a patriarch and a matriarch of a manufacturing company. And so we're doing a financial plan to show them that they have enough assets to be able to live comfortably if they do transact with their children. So a lot of cases, again, I'm the first stop.
Excellent. Thank you. And Gabe?
I think it's interesting. The sellers, I think, are going to be an interesting group to watch the rest of this year and into early next year. I think the buyers are going to be there. Conversations I have with private equity folks and people in that area, they're open for business. A lot of the dynamics that existed pre-pandemic exist now. There's a lot of money to be put to work. Their mandates are still out there to look for good companies and buy companies, but the seller is a little different. Depending on your age, your circumstance, are the sellers going to wait this out? Or are they going to say, you know what, I want to invest the time, the money, maybe the capital to get this business back on its feet, to get it back to a pre-pandemic run rate, and then go to market? I think that's going to be an interesting thing to watch. But one of the things, and it goes up on what Bob said, is sell-side diligence. We've been working. This has been a big increasing area in recent years. Started with larger companies, and in the past few years has really trickled down to the 20, 30, 50, $80 million companies. Sell-side diligence would be something that I would recommend to any company looking to go through a transaction. It's a draw, it's a dress rehearsal. A lot of sellers just don't know what goes into the process. When the buyer comes with their diligence team, they're looking at it from their perspective. And sometimes things can come up in that process that can be deal killers. I've seen it a bunch of times. So go through the sell side diligence and understand where the pitfalls are, what you need to vet beforehand. I think it's a really great process. It's a key process to maximizing what you get and to having a successful transaction. And more specific to this particular situation, you see a lot of EBITDA adjustments, right? And we've seen an increase in those EBITDA adjustments in recent years. You're going to have one really big one this year, and it's going to be called COVID-19, and it's going to be a really big EBITDA adjustment. We're working with clients now, quite frankly, on how to assess that, because there are lots of things that you might not consider that can go into that line to normalize things, and those are things that companies have to think about.
Excellent. Thank you so much. So with that in mind, what are some of the personal or business issues that clients are ignoring right now in the current environment as they focus mostly on cash flow and applying for government funding? So again, Anthony, could you kick it off?
So I'm going to talk a little bit about some of the personal and business issues. It's interesting, just our previous speakers, when Rob talked about C Corps and S Corps, it's amazing, Rob, how many people we see are still on the C Corp side and never really thought about what to do. And the transaction's here and it's too late. So you really need to consult with guys like Rob and Mark. It's unbelievable how many people haven't seen their financial planner. They come to us first. I'm not really sure why, but it's really not the first step. And Gabe, we've been telling folks, do your own quality of earnings. Don't wait for the buyer to do it, because don't be surprised, right? So I think a lot of those things have been ignored over the years, and I think I think they need to be attended to. A couple of other things I think I think people have to look at a change in their business that you got to be careful, because if you make too many changes, it makes your customers uneasy, and your customer account now may not be as high as you want it to be. I think folks have to really consistently and effectively really communicate with both their staff and their customers. And sometimes that may be ignored, but I think it's more important than ever. Bringing some company news and information out there, I think, is important. You still want to be top of mind in your industry. I think one of the biggest issues from a personal standpoint, even a business standpoint, that people have to address is really about connecting. And it's not financial necessarily. It's not planning. It's really about others. It's really about having the right energy, and it's kind of like inspiring some people so that obviously they realize you're still in play, and you still care about them. And I think some of that kind of has gone down the wayside, because I think people are so concerned about their personal health, which I don't blame them. But I think self-worth, self-health, and communications with your staff really are critical at this point. Aside from all the financial things that I think all of our experts can help them with.
Excellent. Thank you. And Rob?
Okay, well, I'm going to maybe broaden my answer to not only the current environment, but to maybe speak in general of business issues that I see ignored on a very frequent basis in the transactions that I've been involved in. And I think certainly it echoes now as well. And in the sales side, there is a concept of personal goodwill. And I find that as you are analyzing and looking at your data and looking at your operations, this would be a great time to spend the time to isolate and try to quantify, work with the CPAs and work with the qualified appraisers, because in that transaction document, in that sale document, we find that often the concepts of personal goodwill are completely ignored, and that even when they're not, there is a lack of real experience in how to uncover it and understand it and value it. The other is that we've seen a dramatic growth in LLCs, businesses being conducted in the LLC and the partnership structure. And when you are doing a deal with a partnership, it is a very different world, both legally and tax-wise. And things we take for granted in the corporate context change very dramatically. I find that people are not focusing it, are not taking advantage of many opportunities, not only in the structure, but obviously in the tax side as well. And I mentioned working with the team. Get that team up now. If you see that this is going to be, and I've had people say to me, I've got a 5-year plan. I hear that all the time. I've got a 10-year plan. I think as a result of this pandemic, that 5-year plan is going to be more prominent. People are going to say, this is something I do want to accomplish. I want to resolve the conflicts among the family. I want to move this in that way and move the succession plan or have the sale. So putting that team together is, I think, critical to that approach right now. So those are the three.
Excellent. Thank you so much. And Mark, what about from a financial planning standpoint?
Okay, so this is on a personal and business issues that's being ignored. Just to repeat the question, I think Anthony had mentioned before about being connected. I think that's a very important thing, especially for employees. As I speak to business owners around the country, they some understand, some don't understand that people are home, and that they need to have connection, and having these Zoom meetings and having these Zoom webinars is an excellent way of connecting, and that's very, very important. So that's one thing to be ignored. The other thing is understanding what their valuation is right now, kind of planting a flag and doing the valuation. So what we've done is we've stepped up our business valuation. So we're doing like Zillow type of evaluations for our clients, our business clients, and and other prospective business owners, just so they can get a sense of what their value is now. So at its low point here, we can see what their value is, and just to get an understanding. One thing that I'll mention for the listeners is, if you want to have a business valuation done, we would do that complimentary for you.
Excellent. Thank you so much, Mark. And Gabe?
Yeah, I think there are a lot of things that can get missed. You know, we mentioned earlier there's a liquidity focus and getting through and surviving over this period of time. And while you're so focused on that, and it makes sense to have that short-term view, you know, we encourage companies to take a more intermediate view. I won't even say long-term view. I'll say more intermediate view. And use this as an opportunity to reassess all different aspects of their business, whether it's the way they go about their production plans, their sourcing and diversifying sourcing and things like that. But we're getting to a point now where the conversations have changed a little bit, and it's a little more focused on the reopen. And some companies haven't really thought about that, again, because they're struggling to meet their expenses and they have their cash concerns. But the reopen is happening. It's happened already in a lot of states. It's going to happen in additional states. And focus needs to be there too. And how are you going to reopen? How are you going to get your employees comfortable? How are you going to get your customers comfortable? You know, what is your plan from a health and safety standpoint? And these are things that need to be considered, you know, as you go through that reopen. The other thing is, as someone who leads the consumer goods group at the firm and works with a lot of brands, you know, brands can play a key role during a crisis. And I think, you know, marketing and messaging, you know, should be considered as you go through this. It should be relevant for the times. And by the way, we're seeing more of a push towards digital and advertising on streaming and things like that, as you have a lot more at-home consumption related to that. But I think consideration needs to be given to the messages and the marketing being on point. You know, discussions of health and safety are going to, you know, appeal to your customers and to others. So take advantage of that. Use that as you plan for your reopen and as you're navigating through this.
Excellent. Fantastic. Thank you. You actually lead us to our last question. Before I actually ask it, I'd like to encourage all the participants to start submitting their questions through the chat. I don't know if I'm doing something wrong here, but I don't see them. So if you have any questions, now is the time to do it. This next segment should take about 8 to 10 minutes, and then we'll get to the question and answer period. So Anthony, what do companies need to do to plan for as we emerge from this crisis?
Well, I'll tell you, you know, it's interesting because, you know, there's no roadmap, right? So I think that's one of the big challenges here. This is not just like a kind of a one you know, snapshot incident. So I think it's difficult. But we're telling folks, you know, really, you know, it may be a good time to kind of right size your business. Look at the areas. You know, you can offset any potential loss of revenue on product lines or service lines that may not make sense. Now's the time to maybe kind of look at that and say, how can I leverage my assets that I am best at and put our best foot forward going forward? Look at our unproductive areas in your business, product, service offerings, and that kind of thing. I think you have to really get good at managing your cash. You know, looking at the cost of operations where possible, you may need to make an adjustment. Make sure that your business is really ready for prime time. If it isn't right now, look at your working capital going forward. You know, you really, and to Mark's point, you know, about the valuation, you need to know the value of your business. We tell folks you need to know what your exit strategy is when you start the business, know what the value is when you start the business and going forward. So now's the time to kind of make a mental note and say, listen, that's what I need to do. And I think don't be surprised by your cash flow needs going forward, because they probably will be greater than you think, and you just have to try to prepare. Last comment I have is I think tools that people need to resume business. You want to try to hit the ground running whenever that ground is ready to be run on. Maybe look at some promotions you could do for both keeping your staff involved and your clients and your customers involved, and then promote what steps you've taken to your customers and to your staff to make sure they know they're on the right ship, they're heading in the right direction. And my last thing is, I just think you got to try to remain positive. It's not easy. I think attitude is critical in this case to success and really overcoming.
Excellent. Thank you so much. How about you, Rob?
Yeah, I think, planning as we emerge. I know we've mentioned the importance of looking at the digital world, which has hit us all maybe harder than we've wanted and more immediate, but it's also got tremendous opportunities, as this webinar shows. From my standpoint and what I'm seeing right now, beyond PPP and the idle loans, are people beginning to focus on other sources of liquidity. And so far we have seen that banks do have liquidity. How and that will unfold, I think that's a little different from what so far I've been seeing as compared to 2008 when the banks kind of closed up. So the government did make some money readily available. There does seem to be a willingness by banks. How far is that going to go? How will that aspect of credit be available in our transactions and our day-to-day business remains to be seen, but so far it looks promising. I'm also seeing many people, if you haven't looked at your loss harvesting, if you haven't been projecting 2020, looking at 18 and 19, the CARES Act made some important changes. People need to be conversing with their CPAs, reviewing their tax returns. There are adjustments that the government has made available, and they will allow carryback claims. We've gotten a lot of questions in the last couple of days. Of course, 10 to 1, it's all about PPP forgiveness. But we've gotten the questions about filing prompt refund requests and these what they call tentative claims, which are very prompt ways the IRS has of allowing you a net operating loss carryback. They loosened those rules up. For those of you who had listened to me maybe in the past, I was saying that the 2017 TCJA in a market downturn would be the death knell to the U.S. economy. The legislation in the CARES Act has recognized several of those areas and have either suspended them or substantially modified them. So those discussions with the CPA are really important because those are areas to recognize immediate sources of capital that don't have restrictions. And obviously, the other thing we've been working with a few clients on who don't have bankruptcy in their future, or they definitely don't want to do that, is working on debt restructuring. And that could be an important aspect. Pre-sale planning is getting your debt restructuring, lease restructuring, that sort of thing. We're going to see more and more of that with our retail entities. And I think that's something to keep an eye on. Thank you.
Excellent. Thank you. And Mark?
So again, the question is, what can businesses do right now to help themselves survive? I think that the world has changed and life has changed. So the word I would use is pivot. they need to pivot. I think Anthony and Rob had mentioned just before about technology and the usage of technology. And like Robert said, we're doing this webinar here. That's something a little bit different. So you need to use technology, Zoom, webinar, a lot of people working from home. So companies need to pivot. An example of that is, so I have a podcast. It's called Find Your Exit. And I interviewed Scott Snyder. Scott is the person that runs Exit Planning Institute. And Exit Planning Institute does a certification called CEPA, and it gets all these people together. And they get together in New York or in Chicago or in California, or all different places in the country. So now that they can't get together, what did he do? So he pivoted and he created a master class where you can take that online. So a lot of companies now need to look at this technology and look at what they do now and how they can pivot and change things. And it can be anything, even from a dentist that, you know, right now a dentist obviously can't get close to someone, but you know, maybe a dentist can get close to their clients by creating a Zoom and saying, doing a video saying the 5 things to keep your teeth healthy during the COVID-19. So think out of the box and pivot. Thank you.
Thank you so much, Mark. How about you, Gabe?
Well, I want to follow up on something Anthony said, and I think it's critical. And every crisis that we've ever come out of, you know, we've been able to overcome apprehension, concern, fear. And so I think a positive attitude and overcoming that, or helping people overcome that, it will be a big part of emerging from this in hopefully a relatively strong way. But I think as we emerge from this, I think companies, you know, do need to reassess different things. And I think, you know, analyzing the data, you know, looking at market data, looking at your customer data, how did your customers weather the storm? And based on that analysis, you know, change your production plans, rebalance your inventory levels. As I mentioned earlier, a lot of conversations I'm having with clients now that source from China are reconsidering that dependence, you know, diversifying sourcing and things like that. I think another thing is, if you had an acquisition strategy, to re-engage with the M&A community in the coming months, because I think, you know, there will be bargains out there for companies. I actually think we are going to see an increase in what I would call hostile M&A. I think you'll see that increase in the coming months. But I think, you know, re-engage with the community, the M&A community, because there will be some I think relatively attractive deals out there. But I think as you navigate this, as you reassess your business, you plan for the reopen, you do these things, it'll help you not just to navigate this, but hopefully come out stronger on the other side.
Excellent. Thank you guys so much. We're actually at the Q&A point. Karen, is there a way to get rid of this slide and just put the speakers up on the screen so everyone could see the panelists a little bit better? We have a question from Shelley Miller, who's with the ICA Group, which is a nonprofit consulting firm that helps companies transition to employee ownership. And her question is, are any of your clients who want to exit considering broad-based employee ownership, like ESOPs or worker co-ops or hybrids? Would this help them retain or call back employees? Any one of you feel equipped to field that question?
Well, I would say we have an ESOP group within the firm, and heads of that group is actually recently been getting a lot of calls on that. You know, I think ESOPs, it doesn't fit everyone, but if it does fit, if it does make sense, there are significant tax benefits to it. ESOPs is not an area I'm an expert in, but we do have a division that's been working on that, and he has been getting more frequent calls recently. So I think companies are considering, you know, that as an option.
Okay, excellent.
And that might be a more important option as we see, depending on what happens with buyers. And again, ESOPs are very complex and very highly involved in appropriate valuations. But I do see that as a interesting succession source as well.
Okay, fantastic. I don't see any other questions there, but I did have a question for either for Mark or Rob, or for that matter, anybody on the panel. When we started this presentation, we had discussed the very strong link between the personal and the business side. And I'd mentioned to Mark how I used to work as a financial advisor, and as I'm going through this crisis, I paused one day and I said, where are my policies? Where are my life insurance policies? Where's my will? And I actually read the documents and realized that, for someone who was in the business, I'm not caught up to date on something that basic. And so, Mark or Rob, what are some of the things from a financial planning standpoint, estate planning standpoint, that are so basic that that everyone's overlooking them right now because they're focused on what may be viewed as more important items?
So one of the things that we make sure of is that everybody has. You mentioned the documents. You mentioned estate planning documents and life insurance documents. So we have a digital lockbox. So what we've done is we have a lot of clients that are putting all their information onto this digital lockbox. So you can access this digital lockbox wherever you are in the world. So if you have a passport, and we're not traveling now, but down the road when you're traveling again, if you lose the passport, you can go onto this digital lockbox and get that. So getting all your information into one place, God forbid, and this is COVID-19, a lot of people unfortunately are passing away. I know a bunch of people, being in New York, unfortunately, I know a bunch of people that have passed away. Having all your documents in one place, God forbid something happens to you, is an excellent idea.
Excellent. And Rob?
Yeah, to amplify that just a little bit, the interplay between the financial and the estate plan is very involved and is important. At the simplest level, I think what Mark was saying is very important. What I generally encourage people to do is keep a copy of at least their annual statements once a year, if not quarterly, if not monthly. A lot of people don't open them now, or they just throw them out, but it is important to keep that trail. It's also very important to look at and to create a financial chart of what are the assets and how they're titled, because the will might say anything, but if the assets are not titled appropriately, it's not going to coincide and be parallel with the plan. So we find a lot of times new accounts are set up, beneficiary designations are entered into, or not changed, or even lost as transitions occur in financial accounts. And people should take this opportunity to really do with their financial advisors a comprehensive analysis and then coordinate that with those documents. So not only knowing that I have my will, but are all of the ownerships in accord with the way that will is going to operate? Because I will tell you, probably 30% of the time when we sit down with clients, there are many, many, many disharmonies within that plan.
And your IRA check your IRA as well, your Roth IRA, your regular IRA. If you have a 401k, check who the beneficiaries are there to go with what Rob is saying.
Okay, excellent. Gabe, I'm not sure. Did you have a comment on the personal side? Because if not, I have a business related question for you.
No, I didn't.
Okay. So I know you have a lot of experience in the consumer product space, the distribution space, and the services. What's going on in those particular industries? I'm particularly interested in retail, right? Because for the most part, a lot of this discussion has a lot of the opportunity that's out there for companies that are right now deemed to be essential and are doing well in the market. But there are many companies out there that are in less favored spaces. And so, what advice do you have for them from an accounting perspective, or what's happening in your world there with those industries?
Yeah, it's interesting. I mean, in the consumer space, the initial reaction would be, gee, it has to be really taking it on the chin. And in large part it is. But there are pockets that are actually doing well. It depends on which space and consumer you are. I was speaking recently to a senior person at the Kind food snack company, and he said, you know, people can't buy our stuff off the shelves at grocery stores fast enough. And so certain things, you know, home fitness, as an example, there's been a big spike in that. So it depends on which part of consumer you're speaking about. I will say this: we work a lot with companies and have in recent years about developing an e-commerce strategy. So to the extent that some of our clients were developing that and the process of developing that, they've accelerated it for obvious reasons. And so I think, you know, for companies in the consumer space, to the extent that you have not developed an e-commerce strategy, you really should. I think it's really critical. Even before this pandemic, I think it made sense to do. But I think this has just highlighted that fact.
Okay, excellent. So now most of this discussion has been about sellers and what should be done on the sell side. But as Anthony mentioned before, we're expecting the market to shift from a seller's market to a buyer's market. And in fact, we still continue to see a lot of interest on the part of buyers, and we have all these different programs that we're putting forth to actually service buyers a little bit better. So what strategies, Anthony, if you can take this question, do you think that buyers should be contemplating right now in this environment? Or put another way, what are some of the different ways that each of you in your disciplines can help a buyer?
So I think, you know, someone has to look at their business, and, you know, we have worked on the buy side for a lot of clients, and they have a growth through acquisition strategy. And we find a couple of things. One, you have to have the financial capability to do it. You have to have the management ability to do it. And we also find folks who've never had any kind of acquisition experience really are shy in terms of, you know, their ability or their desire to do it because they're frightened, right? All of a sudden you're going to take over another company. However, if you're looking at organic growth versus growth through acquisition, and you look at the marketplace today, there should be some pretty decent companies to consider. You have to see if they really fit well into your portfolio, if they fit well into whether it's a strategic acquisition or whether it's an acquisition that's going to perhaps get you another product line, you know, that kind of stuff. But I think, you know, if you really have the capacity to do that, now is just an outstanding time to consider. We've signed 2 new buy-side agreements in the last 3 days with companies in various industries that really know that there's going to be opportunity out there, and, you know, we're able to uncover it.
Excellent. What about you, Gabe? Does your company do a decent amount of work on the buy side?
We do. And to follow up on what Anthony was saying, again, it's very simple to throw everyone in the same category, and it's just not right, because there are some companies, there are certain sectors right now, health as an example, tech, there are certain spaces that are still going to command very good prices even as we go through this year. So again, it's not a one size fits all. You need to consider the sector you're in, and you need to consider how your company has weathered this. Some companies have weathered it better than others. But think about this: if the demand is still there, if you have folks like private equity folks that are active, still going to be looking, have a lot of money to be put to work, there are going to be that smaller of a population of good companies with this pandemic. And so if you have weathered this okay, if you're in a certain vertical that maybe is still doing okay, you can still command that high price. I don't think everyone should go into this and say, wow, you know, valuations and EBITDA multiples now are, you know, cut in half. For a lot of companies, it will be, but for others, that won't be the case.
Okay. And Mark, I know you have, I would imagine with the type of clientele that you have, some of them either have experienced a previous liquidity event or just have the type of funds that they might be interested in deploying opportunistically going forward. What advice would you have for buyers like that, or how can you help them?
Just to be careful. Just because something is half the value it was from November doesn't mean that it's cheap. You know, you got to do the due diligence. I think due diligence is unbelievably important, and getting people that's on this call here involved is vitally important, because it takes a community to you know, to buy a business or to sell a business. So be very, very careful. Just because prices have come down doesn't make it you know, a bargain.
Okay, excellent, good point. And Rob?
Yeah, well, I can kind of tie that up by saying there's still a tremendous amount of opportunity on the buy side in terms of structure, in terms of how the uh, agreement and the purchase is uh, uh, basically from a tax perspective put together. I'd say most of our transactions we see are asset based. So having an understanding of that asset stream and obviously the continuation of that goodwill post pandemic is going to be the big question on the buy side to really look at and try to factor in. On the family side, because I view a lot of our family transactions as commercial buy sell type transactions. The IRS requires us to do that. And so this current environment has tremendous leverage for the family buy sell parts without getting into all the ramifications, but using discounting, again, valuation techniques, using that very low or no interest rate right now, we can structure even for companies that have a few years of trouble and they're looking at lower numbers ahead, but they feel a nice future. We can really take a look at that and work on that plan and achieve some tremendous buy side family results.
Okay, excellent. So we have around 4 more minutes. I'm going to make a quick announcement, but before I make it, I just want to tell the panelists, think about some closing remarks, just 30 seconds of, what in particular in your particular discipline, how can you help the people that are on this webinar, whether they're on the buy or the sell side? And then so think about that for a couple seconds, and then I'll come right back to you. Just some closing thoughts. This is webinar number 2 in our series of webinars that we plan to do going forward for the next few months and through the end of the summer. We're trying to do the webinars in a very systematic way, and the way that we're doing them are in the order that we think that a transaction should be contemplated. So the first step was to really speak with your personal advisor so that you can have that link between the personal and the business. And in 2 weeks, our partner Kyle Griffith is going to be hosting a webinar on exit planning primer, so that you can learn the options for exiting your business on your own terms. So please be on the lookout for that. And also, if you're interested in participating in one of our webinars, if you have any content or any ideas that you'd like to share with the M&A community, please email us and let us know. And obviously, if there are any topics that you would like us to cover, let us know that as well. So with that, I'd like to thank our panelists and go around one more time and just give us some closing statements, or tell us how you can help the people that have been listening to this webinar. Anthony?
So look, we can help folks. We can help you know what your marketplace looks like. We can help you understand what M&A transactions in your specific industry or specialty look like, and what your expectations could be. And we can help research that and kind of get you to a point where you can make a quality decision with the facts in front of you. So, we're open to doing that. There's no charge to do it. And it gives us an opportunity to kind of better understand you and your business and your financials and what your needs are.
Excellent. Thank you. Rob?
Yeah, thank you. And thank you, everyone, for listening. We can help as a member of the team, help coordinate. Obviously, we represent both buyers and sellers and families helping to structure the transactions. And we would look forward to do that. And I'm going to have to jump off to another webinar, but I wanted to thank NYBB and for the opportunity. And it's been a pleasure to be on the panel with everyone. Thank you.
Thank you. Mark?
Bye-bye.
Yeah, Lou and Anthony and NYBB, thank you for putting this together. Really appreciate it. One message that seems common that I'll repeat is for people to stay positive out there. Things will change. Things will get better down the road. So just hang in there. It will get better. As far as things that we can help with, as I mentioned before, we can do a business valuation, a Zillow type of business valuation for your business. And as it pertains to your portfolio, we can also do some analysis and some stress testing of your portfolio.
Excellent. Thank you so much. And Gabe?
Well, thank you, Lou, for hosting, and thanks. And thank you for everyone who joined us. Hopefully you found this hour helpful. I know we've just touched on some things. There's a lot more detail we can go into in different areas, but as O'Connor Davies is a large full service accounting and consulting firm, there are a whole bunch of different ways we can help. Short term, if you're dealing with PPP and elements of need or elements of forgiveness and things like that, certainly, what is currently going on. But then longer term, if you are thinking of a transaction, we can certainly help you plan for that. There are lots of things that, companies need to consider as they plan for that process. Engage your professionals and seek assistance, and that will help you to go through have a successful transaction. And just in closing, I want to say to everyone, stay well, stay healthy, and stay positive.
Excellent. Thank you all so much, and see you at the next webinar.
Thank you.
Thanks, Lou. Have a great day.
Thanks, Lou.
Thanks. Take care.